Afternoon. I'm Cheryl Casoni. I'm in for Charles Payne. This is Making Money. Take a look at this right now. Stocks are slightly lower today, but still near the all-time highs. Any gains for the S&P and the NASDAQ would be a new record. Right now, we're not there, but we've got 2 hours to go. We shall see. S&P is down by 23, NASDAQ down by 7, and there is the Russell 2000. Now, investors are waiting for the big report of the week, the April employment report, out tomorrow morning, 8:30 a.m. Eastern Time. Today's jobless claims coming in actually slightly below expectations. 200,000 continuing claims hitting another 2-year low. What does that mean for the jobs report tomorrow? We're going to get into it. Energy stocks taking a hit today. Take a look at Shell, sliding about 3% after reporting earnings this morning. They missed expectations of both in the top and the bottom line. Stock is down a little more than 3%. Here's what they said in the report. Shell cited a 4% drop in oil and gas output from last quarter due to the conflict in Iran. Now, the company is hoping for a peace deal in the Middle East as a means to remedy the recent production setback, many companies echoing that sentiment. Meanwhile, stock valuations are back in focus. Investors are assessing the long-term sustainability of hitting record high after record high. My next guest is remaining a little bit cautious in all of this. I want to bring in Smead Capital CIO Bill Smead. It's great to see you, Bill.
Great to be here.
So you say, I think this is interesting, that if history is a guide for us, these moments don't end quietly. Some could argue that strong recent earnings are supporting another leg up. It's been a strong, obviously a strong season, but still you're saying that the risk is out there and it's not going away.
Yeah, everyone wants to suspend history, suspend mathematics, suspend psychology and economics. So the market is trading at the highest level in relation to the GDP of the United States in history. The only time close to here was at the peak of the dot-com bubble. Throw in the fact that the semiconductor stocks have done, only time in history that they've done this well is the last 9 days matched up with the last 9 days of the top of the dot-com bubble. Okay. So the problem with all of this is, people do well on stocks in anticipation of you're discounting future returns. And with cyclical stocks, you want to buy them when their earnings are lousy, and you want to sell them when their earnings are good.
Well, one of the points that you make, I think, is so critical here, and this is a macro story, but it's about oil. And that's kind of fueling, I think, what we're seeing with the fear-driven trading that we're seeing. Oil down from the highs, obviously, but consumers are feeling the heat of climbing energy prices. And, take a look at the screen right here. Here's the national average, $4.55. This is up from $3.20 just last year. So there's a psychological toll in all of that. We're seeing it in the polling. We're seeing it in the spending numbers. And we just got some data today that actually shows that consumers are starting to, pull back. They have no choice. Yeah. It's a wallet story for them.
I got my driver's license in 1974, which earned me the right to take one of my parents' cars down to the gas station, sit in a rationed gas line.
Sure.
For 20 minutes. And then on top of that, they mandated lowering the federal speed limit on the freeways from 70 to 55 to save gas. So I lived through the 70s, and in a weird way, we might have entered the 70s, right? The Yom Kippur War kicked off the 70s, and that's one of the reasons why we're so bullish on the oil business, is we're in the early stages of probably a 10 to 15 year phase where these stocks do better than other stocks.
It's certain parts, though, of the energy sector, to be clear, and that kind of plays out with your PECs, whether it's Cenovus Energy or it's APA Corporation. But these are specific plays in the energy sector. You're not recommending we go out and buy Shell today on a dip, or Chevron or Exxon. You're going a different direction.
Yeah. So. See, what's happened is the active management community has gotten much smaller. And so when the biggest institutional investors come to buy the oil stocks, they bought Shell, they bought Exxon, they bought Chevron. They're big and they're liquid. They could get a lot of money in there very quickly. And that didn't spread to the rest, which is where the best bargains are in the rest. So that's all ahead of us. And also, if the oil prices stay anywhere above 75 or 80, there's going to be a bunch of consolidation in the industry, which is the history of the industry.
What we're not seeing, Bill, I think is really interesting, is you're not seeing, drill, baby, drill. That was President Trump's message but the oil company executives are telling us a different story. If you listen to the CFO of ExxonMobil, they say, no, we're not changing our plans. We're staying on target because they want regulatory, issues fixed, promised. They want to make sure that they're not going to get sued by every state and local community. And I think that that's a fair reason why you're not seeing more domestic production.
They want to reduce debt, generate more what Buffett would call owner earnings, and reward the shareholders with wise capital allocation. And let's face it, everybody doesn't remember this, but from 2017 to 2021, there was a religion called ESG. And during that religious time, you were demonized for being in the fossil fuel business. So
environmental, social.
Now we're going to get punished for that because people were afraid to go in the oil business, afraid to poke holes in the ground.
Sure. Climate change lawsuits.
Other than Billy Bob Thornton's son.
Yeah. And Landman's a great show.
Yeah. So what happens is from 2014 to now, that people just haven't been poking holes in the ground.
Right.
And maybe they'll do something in Venezuela because it's just such easy pickings. Yeah. But in the United States, Permian Basin oil wells, you get 70% of the oil out the first 3 or 4 years. So that's why we like Cenovus. They have 25-year life.
There you go.
Wells.
There you go. You've got it. You're being very specific, which I think is crucial here. Now, Smead Capital, 6th largest active mutual fund owner of eBay. We got to talk about that because a lot of news circulating about this company. Just last night, Ryan Cohen posted this on X, saying that his eBay account was suspended due to activity that is putting the eBay community at risk. Remember, he listed several items on the eBay site for auction. Not a crime as far as we know, but GameStop CEO actually came on the show this week. He questioned eBay management's commitment to the company. Take a listen to this.
If you look at insider buying at the company over the past 5 years, it's it's like our board fees. It's zero insider buying. If you look at insider selling, it's hundreds of millions of dollars. So the system, there's a deep problem with the system that exists, but that's corporate America.
You know, Ryan Cohen takes no salary. He's got roughly a 9% stake in GameStop. So is there something to be said about management alignment with shareholders? And what do you make of this proposal overall, which took many people by surprise?
Yeah, the funny thing is we bought this stock in 2008, and it was like somewhere around $15.
Right.
So we have received 1 share of PayPal for each share of eBay, which we sold at an average cost of about $130 a share. So with the stock at 105, we've received about $235, sums on paper, some in cash, and we've been out of the PayPal for a while, so we've made some money on the money. So what's happened to this stock is it's been hated the entire time it's been a public company, because it went from public offering to 500 and then crashed. And then it's not Amazon. And everyone hates them for not being Amazon.
That's why the offer, though, has taken so many people by surprise. And
but look, it's a
little egregious.
It's the New York Stock Exchange of yard sales. Okay. And that's what it's supposed to be. Now, could they improve the company and his pressure help to improve the company? Very possibly. We'd be happy about that. We're owners. But the truth of it is, it's been a splendid investment. Even though somebody might think they've undermanaged it, we've done fantastic.
You've done well. Okay.
We've done really well.
There you go. Bill, it's great to see you. Thank you for coming in.
Yeah.